All right, everyone, welcome back for another episode of Carnivore Trades. Today is Wednesday, April 12th, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel, and come find me on carnivoretrades.com for swing trading alerts and analysis, especially in this wild market here. So let's take a look at the markets today. Wild volatility. Take a look at the spider. So we had this big gap up in the morning. Initially, we got our Goldilocks number 5.0 versus 5.1 expected on the CPI print, and markets initially rejoiced. Let's look at the ES here. Look at the big pop in the morning, and we really just faded ever since then. However, it was not. It was not a straight fade, so it wasn't just kind of a big, move down and then a bear flag and a sell. There was lots of volatility. We sold off initially. We put in a higher low, and it looked like we were going to kind of recover and maybe consolidate this and then push higher. And they whipped us right back down to that 4100 handle on the SPX. Then we floated right back up and right into the Fed minutes. So we had two big data points today. Obviously, one's CPI, the second one the Fed minutes. And initially the reaction was kind of a nothing burger, and then we got a big dump. And I think what did it was the Fed basically in their last meeting, they basically admitted that they're going to push us into recession. Now they said it's going to be a mild recession, just like they said inflation is transitory, and then okay, inflation's not transitory, okay, it's really sticky, okay, we don't know what to do, okay, we raise it. So you get the idea of what's going to happen next, and that's what kind of made the market really sell towards the end of the day. One thing that could have really tipped you off to that, though, and I tweeted about this morning, so we had the big pop in the ES, and I said the market's really liking that right now. But if we flip over to the yield curves, you're going to see, so initially the 2s and 10s, that actually upticked, and it was upticking. It's actually closed to a tighter spread, so an inversion, tighter and less of an inversion. But the 3-month and 10-year was continuing lower. It actually managed to get back to the flat line here. But when I see that, it's just, again, bonds calling BS, and that's one of the things that you can use to your advantage here. So essentially it was a Goldilocks number, meaning the Fed's not going to push us into recession, and that's why the market rallied. But then you see the yield curve saying, no, that's not that's not going to happen. We're definitely going into recession. So one of those little tidbits you can use to your advantage. I use, as you guys know, I look at bonds very closely, and I think you all should too, especially since that's what makes up the market. So anyways, a couple of things about today's price action. So we've been talking a lot about yellow flags lately. They're starting to turn into red flags here. Now, importantly, in the near term, I don't think this is anything more than just kind of a pullback day here. I know that's hard to believe. Yeah, we do have an engulfing reversal, and yes, you did have a little uptick in volume here. I'm doing this video just after the bell, and we had 80 million shares today. That's not mega bear volume. It's not even average volume, right? So there's the yellow line. That's my 50 moving average for daily volume, and that's at 93 million. So we still have light volume out here. Now, we had the Fed minutes and the CPI. If we were going to have heavy volume, it should have been today. So that, to me, I don't really see, I still see it as being in a buy the dip environment for now. But like I said, those red flags are starting to turn yellow, those yellow flags are starting to turn red. And one of the things I warned my members about this morning, I said, look, we might fade this open. Take a look at the semiconductors again. I keep bringing them up because they're very important. But the SMH down 1.78%. That rising wedge, that smaller one, that held. So we broke it, and then we back checked it, and then now we had a nice follow through to the downside. Take a look at NVIDIA, everybody's favorite. Nice head and shoulder pattern there on the daily. It's not a huge one, but that should take you down to 240 if we get follow through tomorrow. We've only closed below the 20 moving average once since like the beginning of the year, basically. And it was, this was earnings. So, it held the next day, and then it popped way up. So there's nothing to say that, they can't save this tomorrow. But that's weak. That's a sign of weakness, and everybody knows it. I mean, come on. This is the most exhausted stock, the most bloated pig in the whole market, and it's on borrowed time. But that's definitely a sign of weakness there. Semiconductors are very important to technology and very important to the market. They're in basically everything nowadays. They're in vacuum cleaners and refrigerators, right? So that is a good. I look at them kind of similar to the transports, but they went negative very quickly this morning. And it said, look, this market might go down. That's a 1% drop there in the Qs in about 10 minutes. So that was a red flag. Another one, really the transports, yes, they gapped up with everything, but that was not showing a lot of strength here. And again, you have, lower highs here on the transports, versus the market. This does have a lower high, but it has higher highs as of late. And the transports do not. So that is a sign of weakness. Also, the Russell, that went, negative pretty quickly as well. That's been a weak name. Still could not make higher highs. This is still, guys, this is a weekly bear pattern here. Down move, red bar. Let me clear this up. Red bar, that's an inside bar pattern, and inside of an even bigger monthly red bar. So that's, obviously not good. But in the near term, that's a weekly inside bar. Additionally, our favorite KRE, that went red pretty quickly as well, fading that gap. So that was another red flag. Another one to look at, HYG, lower highs here. So that's showing a divergence here. Just these, and then we looked at the yield curves. We talked about that earlier. These are starting to turn into red flags, not yellow anymore, because you're seeing the market unable to hold the gains when we get bad news, right? Bad news is good news. It's starting to act like that's not the case anymore. So I still think we're in an environment, not much longer, but we got a little bit of time on the clock where this market can hold up. But that's about it here. So we're seeing those red flags start to crop up. Technically speaking, the market's okay until then, but I don't want to see the market. Look, this is why the market was up today. Berkshire Hathaway, XLV, JP Morgan, and XLE. That's not what I want to see in a bull market. I want to see QQQ. I want to see IWM. I want to see those leading, and we're not seeing that right now. So, I don't want to see the Dow leading. The Dow was leading today. Finished up basically flat. Q's finishing down pretty sharply. Spider's down almost 0.5%. So again, you're seeing fundamentally from a not fundamental standpoint, from like a structurally fundamental standpoint, market weakness, and we're seeing kind of more of a flight to safety as we see, XLV. XLV shouldn't be leading in a bull market. That's not how it works. So, anyways, let's get over here and cover the sectors again. SMH, so good outside move. You still held this low. If that low goes, you're going down to this lower trend line, and that is going to be an important trend line. I do think it holds at least on the first test. Maybe you can get one more pop, but that's about it in the semis. And I talked to you guys about this a lot. I said, look, this is about all we see here for upside. You're going into a lot of resistance, and I know everybody was bullish because the semis were holding up, but I just didn't see a ton of upside here in the SMH, and that has been the right case here. Just making that slight higher high and now really struggling there. Obviously, we talked about NVIDIA, but semis are in trouble there. IGV still remains a strong horse. It did close finally below that green bar there, though. So 297.50, we closed at 297.24. So we did negate that green bar. That is a sign of weakness there for cloud. If that continues lower, it's going down to this gap here, and you'll have some support at that 50 moving average, but right around 290. Should be good daily chart support for IGV, but that's definitely a sign of weakness there for a sector that's been strong lately. It's been holding up and it's been outperforming the market. So cloud coming under pressure. We mentioned the transports already, but let's look at them again. So that's again basically, and there's volume there. That's where your volume is too. So look at the DJT volume today. That's you got to go all the way back to the September. This is when people were panicking, right? And we had that type of volume. So transports, definitely showing that weakness, and that's why I say it's not a yellow flag anymore. It's starting to look red, and you basically had an engulfing reversal there. Again, clearly that 14,440 level is an important level there because we've hit it twice, and we've had good reactions off of that. But transports, again, showing a divergence. That is not a good sign. All right, over to bonds here. So the 2-year did finish up. It's still holding that 200-day moving average, hanging in there okay. Not the best though, just not the best look overall. The 30-year on the ZB, that basically finished flat. It came way off the lows. This was all over the map today. Again, kind of like the spiders. We had a big pop initially, and then we came way down, and now we're coming off the lows here. Again, nothing's really changed here. If we look at the TYX, I'm not looking for a ton of downside here. Could we get some if we start getting more recession talk and more recession fears? Absolutely. But this is really about it here. Right down into this area, that big gap there, and the 10-year, it's right around 3%. So maybe it could get to 2.875. A little pierce. Can't rule that out, especially if there is fear. But that's really all I'm seeing there for downside in yields. And then the 2-year, it's holding up okay. This is why the market can rally though. So if we flip back over to the yield curves again, actually we'll just use the 2-year. So that's at 3.96 currently, and the Fed funds is 4.83 to 5%. As long as this is below 5%, the market can hold up. If this starts to surge again, that's where you're going to have huge problems, and I think it will. Probably not right away, but inflation doesn't go up in a straight line just like markets don't. So just be aware of that. But bonds, hanging in there today. Lots of volatility though. All right, over to housing. XHB just does not want to go down, right? So interesting closing price there. But it touched that 50 moving average. We talked about that yesterday. The 68, 69 handle, or 67 to 68 handle. And it did close just fractionally lower here, but this was holding up, and it's been strange, right? This has been going up with yields and down when yields come back in, which is counterintuitive, but that's really been the case lately. It did finish slightly negative. ITB as well, had a nice outside move, tried to get above this pivot here, some resistance in that area, and it closed negative. We'll see what it does tomorrow. VNQ also. So again, we talked about that level 84. You touched it yesterday. We basically touched it again today. 83.98 was the high, and it backed off of that, closing below yesterday's opening price. Not quite an engulfing reversal there, but this has just been a weak name. I would avoid it here for the time being. If it can consolidate a little bit more, maybe it can get a pop. But again, it's going to need a lot of help from the broad markets. So, anyways, over to fins here. So XLF, gap and crap day, just like everything else, down 0.25% ultimately. Still showing more relative strength. Again, Berkshire, this is a safety play, and Berkshire makes up a huge portion of the XLF. JP Morgan was actually finished red today, but it was up most of the day, and only down about, 2 pennies there, so nothing terrible. So that is kind of helping to float that XLF up. Ultimately, this is still a weekly bear pattern here, and that probably wants to get down. I mean, you got a big gap there on the weekly, but there's a little bit of support around 115. But these are not patterns of strength here in the financials. Again, I don't see a ton of downside right now, not yet, but there will be in the future. KRE is just not showing anything. It's not getting anything going. I played this to the long side. We got a nice little bid out of it, not a huge gain, and I decided to dump it because it should have V-shaped after I bought it, and it hasn't. And it's actually made new lows since then. You can't even get a bid off that 20 moving average. You can't even get through that. That's not, not a sign of strength here. That is a red flag. KBE trying, gapping above the 20 moving average and coming back in. So still weakness in the financials. Don't let them tell you the banking crisis is over. It's not. There's still, it's a Roach Motel. Trust me. This is how it works. I'm sure in a few weeks we'll find out more. Broker dealers here. Again, struggling with that 20 period moving average and the 200. This is a weekly bear base here, same as all the other fins. Over to crude here. So nice move for crude, and despite kind of the recession talks, crude got a bid. I don't think that this has a ton of upside here, though. There's a lot of resistance in this area. Even just here, let me just clean this up. This is, you were stuck in this range between 85 and 93 for August, September, October, November, and then December. There's a lot of buyers in there that are trapped, and we're up here. We've got a big gap. I just don't like the I didn't want to go to the weekly there, but I just don't like the upside right now for crude. Long term, yes, obviously, but I just think it's extended here, and you have not done anywhere near enough consolidation to get through this area. But it's holding up for now, so again, we'll respect it. XLE is strong sector today, up 6 cents. Finally closing above that 20 moving average, or 100 moving average again. So that, it's been struggling with that area. There's still resistance up here. If this consolidates, it can get through that. But again, like I've been saying, XLE, you don't want to see that leading. That's just not a good sign for the market. XOP did finish negative. Again, we talked about that necktie, 100, 200, you're basically into that area. And it had a good reversal off of that. OIH managing to scratch out a gain. Nothing to do with this right now, but it was up 58 basis points. It's hanging in there for now. Nat gas did retreat a little bit, down 4.6% currently. Had got to close above that 20 moving average yesterday, and then unable to follow through here today. Again, this is still the seasonal bull period, though, for nat gas, so I am optimistic for price to push higher throughout the spring and summertime. Over to the DXY here. Let's go over to TradingView since I have my window up. I apologize for that yesterday. I just don't like all those little dojis that Thinkorswim's putting on there for some reason. But you can see here, we're getting close. So let me fix this chart a little bit. There we go. So I'm still thinking we're looking at some type of a double bottom move. You can see we kind of moved down. Then we had kind of a bear retrace. We touched the 20 MA. And now we got fuel to push off of that. So that should get to double bottom. And, maybe even a little bit below that. Again, you guys know where I'm looking for. Maybe even the 100 handle, right? So right in this area. This is just a monthly level that took you 8 years to break out of. And now it's getting back tested essentially. But I'm starting to like the dollar down here, but it needs to get a little bit lower for me to want to do anything with it. And that's also why the market's going to continue going up, right? As long as it stays in this downtrend here, daily chart downtrend, market's going to have a tailwind. And that's why I'm not getting too bearish just yet. But again, like I said, there are some serious red flags starting to pop up. Gold here holding up, came off the highs here, filled that little gap there on the daily. Still a lower high. I wouldn't make too much out of it. You have a daily inside bar right now, just like the last one. If we can take a look, let's see how far off the highs we are. Yeah, so we still got a ways to go to even get up to 2078. But it's holding up okay. Nothing bad about it. It's just overbought, and you guys know my thoughts on that. Again, I'm not a buyer up here. I know everybody wants to buy. I know everybody's in, talking about precious metals. But, if you go back to 2008, everybody's talking about like our banking crisis. You want to own gold. You want to own gold, especially if we're in a recession. Yes, but if you go back to 2008, I'm going to use a weekly so we can see it a little bit better. We rallied up into it, and then when the crisis really started to come to fruition, gold sold off pretty sharply. And that ended up being a huge a lifetime buying opportunity. I think that's what's going to happen now. So I'm not a buyer up here. I could be wrong. If we consolidate enough, we can go higher, but I'm not in that camp just yet. But, gold's holding up, really nicely, and I can't say anything bad about it in the near term. But I just can't buy when it's at highs like this. So there's always a pullback. There's always a correction. Don't think you're ever going to miss the move. Silver, nice outside move up 1.7%. This is getting very extended now into a lot of resistance here, weekly resistance with this red bar. Maybe it wants to go pierce 26. What a thrust there on the weekly time frame, though. Big power move. Yeah, what can you say? It's overbought, it's extended, it needs to pull back, but it's acting well, and it's acting like a safe haven right now, so we'll respect that. Platinum here getting a nice outside bid from yesterday's move. Again, still good inside bar. This still has, we'll call it, maybe it can get up to 1050 even. If this can base a little bit more, but this pattern's not terrible. We'll watch that on platinum. It's hanging in there just fine. Copper hanging in there okay as well. This just does not want to maintain a trend. Let's see, the high from the other day was 47.105. So we're very close to that right now. We'll see if it can close above that by 5 p.m. If it does, maybe 420 is back in the cards. I still think it wants to go back to 375 eventually, though. All right, over to Bitcoin here. Bitcoin pulled back finally. So nice little dip there. Nothing crazy, though. I still think this can go a little bit higher here, maybe even to 32, 32.5, 33. That's about all I see for Bitcoin at the moment, but it's holding up okay. If this consolidates further, this can get one more thrust. I think that would coincide with one more thrust in the equity markets, and I would think that probably comes sooner rather than later, but we'll see what we get here moving forward. We have a lot of data coming out. May FOMC is going to be huge. So, if the Fed pauses, which now they're at only a 60% chance of a 25 basis point hike, if they pause, it's going to be very interesting to see how the market reacts. I think you'd initially get a huge explosion, and then that'll probably be the top. But we're a little ways away from there, so we'll talk about that in a few weeks. Anyways, guys, I'm going to wrap it up here. You guys take care. Come find me on carnivoretrades.com. Talk to you all tomorrow.